I want to start off by just sharing a little bit of my background and story with you guys, and ultimately what led to Trusted Smart Chain. I got involved in cryptocurrency back in 2016. I first heard about crypto from a friend of mine in 2011. A good buddy of mine came to me and he said, "Hey, look, I'm going to put 5 grand into this thing called Bitcoin, and I think you should too." And I said, "Okay, well, tell me about it. Is it a gold, silver coin?" He says, "No, it's digital." And I said, "Okay, digital. All right. Well, where do I get it?" He says, "Well, you got to find somebody that's willing to sell it to you." There were no exchanges at that point in time. And I said, "Okay, so it sounds like I got to do like a dark alley deal somewhere to go buy this coin, but okay." And I said, "Well, what can I do with it?" And he says, "Well, you can't do anything with it." I said, "Okay, well, how do you make money with it? Like, what if I want to get my money back?" And he says, "Well, you got to find somebody that's willing to buy it from you." And I just looked at him and I said, "Man, I'm pretty sure you're getting scammed, dude. Like, I think this is a really bad idea." And I chose not to get involved. He put 5 grand into it, and then he kept putting money in it over the course of the next couple of years. And we went to lunch around 2020, 21 is the last time I saw him, and he moved to Costa Rica. But we sat down at lunch, and he pulled out his portfolio, and he had over $50 million worth of Bitcoin at the time. And the moral of the story is I didn't. And so I feel like I missed out on a pretty big opportunity. And so same guy calls me in 2016 and he says, "Listen, there's this new blockchain that just launched called Ethereum. They've introduced these things called smart contracts that really are going to pave the way for anybody and everybody that essentially wants to launch their own currency, their own token. And this is going to be big." And he said, "I'm going to start mining it." And he explained the concept of mining. And once again, I had no idea what he even said. He explained it to me and it made zero sense. But this time I wrote a check and I got involved and I started earning these Ethereum coins when they were worth less than $30 a coin. And I really started to look at it as a more sophisticated way to get involved in cryptocurrency, because while most people were going out and buying the coins and trying to time the market, which is extremely frustrating if you've ever been there, and I'm sure probably most of you guys have, it was more about just accumulation and dollar cost averaging. And I didn't even think about it. I just kept getting these daily digital rewards. The analogy I tell people all the time is it's a lot like going to the grocery store and either A, buying a dozen eggs or owning the chicken that lays the eggs every single day. And we did really, really well with that project. And over the next 3 or 4 years, I got involved in all kinds of different things. And a lot of them turned into scams. I lost a lot of money during that period of time. In the world of crypto, the school of hard knocks is real. But eventually you start to learn how to look past the hype and the speculation and the marketing, and you start looking for real world utility and infrastructure. The reason why I did really well with Ethereum, and if you understand Ethereum was a layer one blockchain that came along at a time. They introduced these smart contracts that really paved the way for all of the meme coin era, all of the NFTs, DeFi apps. All of these things were built essentially on Ethereum. And as a result of that, they required everyone, if you want to go buy any of these coins that are built on the Ethereum blockchain, you have to go buy Ethereum first. And so what it did is it created a tremendous amount of utility, which ultimately led to the second largest blockchain in the world. And that taught me a really valuable lesson about infrastructure, number one, and number two, about utility. Why most people are looking at the marketing and the hype and the sizzle that's out there with these different projects. I started to look past that, and I learned probably one of the most important lessons that I've ever learned, which is true value in this industry is not a derivative of marketing. It's not a byproduct of hype. It's a byproduct of functionality. It's a byproduct of use itself. And so by the time 2020, 21 came around, I'd earned millions of dollars in this industry just because I started to learn how to evaluate these projects. And I heard the whispers of the idea of cryptocurrency that was backed by high valued assets. At the time, it was a project that was backed by oil, natural gas, gold, aluminum, and a few other projects. And for me, I've always asked myself, what's it going to take to get cryptocurrency to a point where it's taken seriously, where it's not just considered this fringe experiment, but the masses are getting involved. And I've always felt that we had to move from hype and speculation to a place of tangibility and substance. And so when I started hearing this early conversation about coins that you could actually, that were backed by oil, I thought, man, this is going to be huge. This is going to attract an entirely different investor base. And so I got involved and I bought a bunch of nodes and I started supporting early on the infrastructure of this particular project. And the project's exploded and it did extremely well. And so then they expanded on and they opened up natural gas and gold and a few other projects. I started off as a node operator eventually, and my background is I've developed organizations around the world, sales and marketing teams. And so they asked me to come in as a consultant and help them put together their affiliate program essentially and help them to grow this thing. And I thought it was one of the most powerful projects in the world. I was doing exceptionally well and felt like everybody needed to know about this and that I could play a role in kind of maturing the cryptocurrency industry and what I thought was the future. And so this project exploded, I mean, into 60 countries around the world. And around this same time, some of you guys might remember, but the FTX exchange went under and a guy by the name of Sam Friedman went to jail. And when that happened, the government took a very aggressive position towards cryptocurrency. They started filing lawsuits against all the prominent cryptocurrency companies. They pretty much came out and said Bitcoin wasn't a security and everything else was a security. And so overnight, they pushed the entire crypto industry into a gray area. The entire industry was calling for clarity, and instead, what we got was enforcement. And so they started filing lawsuits. They filed a lawsuit against Coinbase, Binance, XRP, and hundreds of other companies. Well, the company that I was a part of, I wasn't an owner in, they ended up getting sued civilly for selling an unregistered security without a securities license, which was kind of the angle that the government used to go after these companies. And the real reason was that the government just didn't have their arms around it. They didn't have the ability to be able to track it yet. You could get around taxes. The banking system was throwing a fit because money was coming out of the traditional banking system and going over to things like Bitcoin, and they didn't like that. And so that was their response. And ultimately, the company ended up getting sued, and then they started going after the top affiliates and consultants, which was myself and one of my other business partners. And so I got dragged into this lawsuit for selling an unregistered security without a securities license. And so we had two choices. The first choice was either A, I could go pay a fine and then have a securities license against, or a violation against me, securities violation. Or the second option was I could go and fight the US government, which either one of those were very attractive positions. But I'm a big believer that sometimes when you're passionate about something and you believe in something, you've got to be willing to stand up and fight for it. And what the government was doing was just wrong. It was kind of like, think about this. It's like if you were driving on the Autobahn, there's no speed limit, but they could just pull you over for speeding. And that's what was happening in the world of crypto. And they tell everybody that they're a security, but then they don't give you a pathway forward to even register as a security, because if you tried, they would decline you. So we actually went to court, and this was a pretty big case. It was a David versus Goliath case. It was on the front page of Yahoo Finance and every other publication out there. Elon Musk was tweeting about the case. And the reason why is because we were one of the early cases where we were challenging the SEC on their ruling of cryptocurrency being a security. And so when you go to fight the SEC, they don't fight very fair. First of all, they come at you a number of different ways. The first way is they try to freeze your assets so that you can't defend yourself, which they did successfully. Number two is they create false narratives in the media and they attack you publicly. And then the number three thing they do is they try to drag it out in court so that you just can't keep up financially. And so we spent millions of dollars. We went through the entire federal court system. We were beat up in the media, and the end result was we won our case. And not only did we win our case, but the SEC was held in contempt of court for, and I'll quote the judge, for actually lying in the court and misrepresenting the case deliberately. They were fined millions of dollars. The attorneys that brought the case forward were terminated, and they actually were forced to shut down the regional office that brought the case forward against us. As a result of that, a month later, Gary Gensler ended up getting grilled on Capitol Hill. He was the head of the SEC at the time because of their abuse of power. And what ended up happening is our case law ended up being used to assist cases like XRP and a lot of the other more prominent cases moving forward. And eventually, Gary Gensler ended up stepping down. You had Paul Atkins, the new head of the SEC, that came in. And the first thing that happened when the new administration came in is they publicly stated that the war against crypto is over. And they actually invited those that were persecuted and prosecuted to Mar-a-Lago. We were among them. And there, they basically laid out a framework of how they were planning on integrating cryptocurrency into the rails and the infrastructure of the financial system. And how over the course of the next couple of years, you're going to see the banks move from a position where they were once completely against cryptocurrency. I mean, it wasn't that long ago they were saying crypto is a decentralized Ponzi scheme. Warren Buffett called Bitcoin rat poison. To all of a sudden now you're seeing executive orders being signed where banks can be custodians over your crypto. They can now sell you cryptocurrency. You can qualify for mortgages utilizing your cryptocurrency. They said that crypto would never be integrated into the traditional banking system. Now you can go buy your ETFs, Pretty soon, 401ks will be directed in the same direction. And so in the last year and a half, we've watched everything completely change. But the biggest conversation is tokenization of real world assets. That is the main focal point of not only these major institutions, everybody from JP Morgan to Fidelity is talking about it. Larry Fink recently just said that it's like a freight train that can't be stopped. We're literally at the very beginning of it. And Paul Atkins, the head of the SEC, said over the next 5 to 10 years, everything will be tokenized. So what I saw 5 years ago is starting to come to fruition right now. The problem is that we've been lacking framework, clarity, regulation that gave these real world assets the ability to be able to move forward. And there's no direction on how to do it. And so my partners and I, having gone through this experience, we started asking ourselves some pretty difficult questions. So for example, how do you build something that you can trust in a trustless environment? How do you build something that essentially will last when there's no regulation or clarity? And that is why we built Trusted Smart Chain. What we realized is we had to control the infrastructure. We had to build our own blockchain, and we had to embed into the actual blockchain regulation and compliance that holds these real world assets accountable and essentially provides investor protection on the other side. And in what I'm going to show you here in just a moment, as we get into the presentation, is how we have created a way for these real world assets to now go register with the Security Exchange Commission and essentially be traded on an exchange in the open market, which now allows investors to be able to come and actually buy tokens that give them ownership in a high valued asset rather than just going and buying some speculative coin. And so very similar to the stock market in the sense that where you go buy a certificate of stock, now you're getting a right of ownership in a company through the process that essentially that we have created with the layer one blockchain that we've built. So that's the process that ultimately we went through that led us to where we are today. So I'm going to pull up my slide deck here and I'm going to take you through this. There's a lot to what we're building. And so I don't mean to throw a ton of information at you, but I think you'll find this to be very interesting. And I think that you'll see how Trusted Smart Chain has created a tremendous amount of utility for the Trusted Smart Chain coin in the exact same way that Ethereum did back in 2016, which is why we now have 41,000 active nodes that are supporting this project all around the world, and why we were voted as blockchain of the year last year. It was actually pretty cool to be in Washington, D.C., being recognized by the same people that were, not the same people, but the government that was suing us 5 years prior, 4 years prior, standing there with all kinds of senators and congressmen and the Speaker of the House because of our contributions to what we've brought to the table in the blockchain space. So just a quick disclaimer, I own a company called ProsperLink. ProsperLink, my partners and I own it. It's a software sales company. We hold an exclusive contract with the governing DAO for Trusted Smart Chain. So Trusted Smart Chain is not owned by anybody. It's fully decentralized and it's governed by a legal charter. So the shareholders, the node operators, essentially, if you will, are stakeholders, and every node that they operate gives them a vote. And the blockchain is fully 100% run by the members itself. When we talk about nodes, which support the blockchain, these are software licenses. They're not classified as investments. That was clarified in March of 2025 on the front page of the SEC.gov. They came out shortly after the new administration took over and said that proof of work and proof of stake mining is not considered a security. Had we had that 4 years prior, we would have never gone through the lawsuit that we went through. That was further demonstrated just a few weeks ago. You probably saw in the media that they took I think it was the top 15 coins and clarified that they are not securities. And so these are not investments. We're not allowed to call them investments. We don't make any guarantees of income or profits or financial returns of any kind. The analogy that I would give you is you guys could go buy a Bitcoin miner today on eBay and they'll ship it to you and you can activate it and you can connect and you can start earning Bitcoin for your support of the network. But there's nobody at Bitcoin that's going to guarantee you a profit. There's nobody that's going to guarantee you any type of income at all. At the end of the day, those tokens can go up, they could crash in value, they could disappear. If you do so because you understand supply and demand. You understand that unique fixed supply that Bitcoin created and the overall demand over time has led to an asset that has outperformed every single asset class on the planet over the last 10 years. So with that, we built Trusted Smart Chain very simply to bridge the gap between these high valued assets that are wanting to tokenize and blockchain. The idea was to create a universally accepted framework for the tokenization of real world assets at the perfect time, which is where now tokenization is the biggest conversation in the world of banking, finance, and cryptocurrency. I'm not going to spend a lot of time on how blockchain works. At the end of the day, you guys are in finance. I'm sure you understand blockchain. Blockchain is a ledger. Nodes essentially support the blockchain and they secure it and they help to validate transactions. This is different than Bitcoin mining. I want to be very clear. In the old days, when Bitcoin launched their blockchain, you could operate a miner, which was hardware, and that hardware required a tremendous amount of electricity. In addition to that, so not only did it consume a lot of power, but these miners competed against each other to solve mathematical equations. And if they solved the equation, they were awarded a block and essentially Bitcoin to go along with it. That's not how blockchains operate today. They've evolved quite a bit. We no longer use hardware and miners. We use what's called nodes, which don't require all of that electricity. Number two, you don't need millions of them on your network anymore to support your network infrastructure. And number three, they don't compete anymore to solve mathematical equations. The nodes work synergistically together to secure the network and to validate transactions. So when we talk about operating a node, it's similar in the way that you've heard Bitcoin mining of the past, except 16 years ago, the first blockchain that came out, which is Bitcoin, is very antiquated to where we are today. So tokenization of real world assets. I actually, if you don't mind, Eric, do you mind if I play just a quick 90-second video here? Because there's a video that I would love for you guys to see that I think would add some value to this conversation. And it really does set the stage pretty well for, and some of you may have seen this, Eric may have shared this with you, but I think it does a really, really good job of just encapsulating what's happening right now in this space and just how big this really is.
For decades, ownership, fundraising, and access to private markets have been defined by a system built in another era. A system built on paperwork, intermediaries, and closed networks. A system where access was slow, settlement was manual, and participation was limited to those already inside the gate. The old financial infrastructure wasn't designed for openness. It was designed for control. Built for institutions first, and everyone else second. But that model is starting to break. Tokenization introduces a new foundation. Real-world assets can now be represented as programmable, trackable, divisible digital securities on blockchain rails. Ownership can move faster. Capital can flow more efficiently. Participation no longer depends on being inside the old system. And this is no longer theoretical. Across the industry, researchers and market analysts are already tracking tens of billions of dollars in real-world assets moving on-chain, with hundreds of billions more represented in tokenized form across multiple blockchain networks. The shift to digital asset infrastructure is already underway, and the opportunity is bigger than speed. Tokenization enables transparent ownership, automated compliance, real-time settlement, and entirely new models of capital formation that were never possible inside legacy systems. McKinsey estimates around $2 trillion in tokenized financial assets by 2030. BCG projects tokenized funds surpassing $600 billion. This is not an upgrade to the old system. It is a paradigm shift. From paperwork to programmable ownership. From closed systems to connected rails. From financial infrastructure built for the few to financial infrastructure being rebuilt for the future.
I have a friend of mine who is he's a sharpshooter and he's one of the best in the world. And he lives up the road from me in a car club that we're a part of. And, he's been watching what I've been doing for quite some time. And he just really didn't, he just didn't understand. He just thought it was kind of crypto, like, anything else. And he was invited to go to this retreat not too long ago with 100 people that were there, and they were high net worth individuals. 40 of them were billionaires. Eric Trump Jr. was there, and among a bunch of others that were billionaires. And he said, Travis, in the 7 days that I was there, the main focus every single day was tokenization of real world assets. It's all they talked about. And so this is a big deal. And the reason for that, just so you guys know why there's a shift that's happening, is it's faster and it's cheaper and it's less risky for companies to go raise capital now using tokenization than it is for them to go to, let's say, private equity or the capital markets. Private equity always wants you to give up control, and nobody wants you to give up. And the capital markets today costs on average about $5 million to take your company public. And let's say that you do make it and you go ring that bell, congratulations, your dollar turns into 80 cents overnight. And the reason for that is because there's widespread manipulation in the stock markets. You have these companies like BlackRock and Hindenburg and these large institutions that through dark pools, naked shorting, bots, front loading, have the ability legally to manipulate the stock in their favor. So if you're a company trying to raise capital going to the stock markets against these institutions with unlimited resources, it's a very risky proposition. Now they can look to blockchain, which is about 1/20th of the cost of going to the capital markets. And because there's instant settlements, they're not exposed to the same traditional risks. That's why you're seeing this paradigm shift that even Larry Fink says will completely redefine the rails of our entire financial system. The problem is this: there is still no clarity or framework or laws or legislation or regulation around this. It's coming. We saw the Genius Act passed in the summer of last year. The Clarity Act hopefully will be passed soon. The Clarity Act, by the way, is the last piece of the puzzle for the banks to go all in, 100%. They're already prepared. They already have their rails built. That is the last piece of the puzzle. So when you have, think about this. If you want to take a company public, there's a checklist that you have to follow. There's a roadmap that you have to follow. In the world of cryptocurrency, that doesn't exist. And so what that's done is it's left people feeling like, how do I trust this? And that's where we came in. And so what we did is we developed a universally accepted framework for tokenizing real world assets. What we're doing is, first and foremost, we divided crypto into two categories: the speculative world, and then your true existing businesses with cash flowing assets, no speculative or unproven projects. The speculative world, as you probably would guess, is where 9 out of 10 projects exist. These are projects that, they're an idea, or they're driven by marketing, they're driven by celebrities or influencers. This is where Kanye West token or the Haktua token exists. On the other hand, you have existing businesses that are cash flowing that want to raise capital. We only work with existing businesses that are already cash flowing. But here's what we figured out. We figured out that the process wasn't enough. We had to control the infrastructure. So what we do is we require every single real world asset that is tokenizing to actually go and register as a security with the Security Exchange Commission. They have to file a Reg A filing. What that does is it now forces them to get independent audits up front and annually thereafter to ensure that all of these assets are properly valued, that they're properly tracked and properly secure. And that leads to transparency. See, it's not enough. Even going back to where I started, when I first started hearing about tokens that were backed by oil or gold, it's not enough to just say that these are backed by $1 billion in businesses. And here's why. If the asset is unwilling to go through a regulatory and compliant process that essentially starts with an audit to establish that the real world asset exists or even has real value, and then B, ties up that asset through a smart contract, and here's the key, to an actual shareholder log that now allows you to be able to go to an exchange and buy tokens that are giving you actual ownership, the same as a certificate of stock, in that high valued asset. If a real world asset is unwilling to go through that process, all you have is clever marketing that is designed to get your dollars. What we created and embedded into the actual code of our blockchain is that regulation and compliance. Through our launchpad, what we now require is every one of these real world assets to essentially come on chain, but they have to do it and they have to verify all of these different stages. People ask me all the time, how are you guys different than Ethereum or Solana or any of these BNB, all these blockchains that are out there? How are you going to separate yourself from anybody else? These are great blockchains. I own all of those projects. But what I want to do is I want to share with you a little 70-second video. And this particular video, I think, helps to understand our unique and meaningful position in the marketplace. To set the stage for this video, I'm sitting right outside the park by the White House in Washington, D.C. And in this particular case, we had just been recognized for Blockchain of the Year. I had my videographer there with me, and I said, let's just do a little experiment. And I pulled out my phone, and I started asking ChatGPT some questions, and this is what came out of it. People often ask me, how is Trusted Smart Chain different than any other blockchain that's out there?
I was recently having a conversation with ChatGPT, and I asked the question, how many blockchains are out there today? And it said over 1,000. And I said, okay, how many are true layer one blockchains? We're not talking about, an extension of Litecoin or some type of a white labeled blockchain. And it came back and said 130. And then I asked, well, out of those 130, how many are fully operable? That means that their node network is active, their validators are online, they have the ability to be able to host a smart contract. And it said 30. And I thought, man, we are one of 30 layer one blockchains, which is pretty exciting. Then I asked the question, how many of those focus exclusively on real world assets? And it said 10. And then I asked the most important question, how many of those blockchains require every real world asset to file a registration A, register as an investment with the Security Exchange Commission, have independent audits up front, and annually thereafter? And it said 1, Trusted Smart Chain. You want to know how we're different? We're raising the bar in this industry.
So what you have to understand is while there's other blockchains that have come before us, they aren't concerned about regulation and compliance. They were built for the speculative era. What Trusted Smart Chain is focusing on is this next chapter of cryptocurrency, the future of cryptocurrency, in my opinion, which is the tokenization of real world assets. And to our knowledge, we are the first layer one blockchain in the entire world that is implementing these standards that have actually baked them into the code of our onboarding process. So that gives you a little bit of an idea of what our meaningful purpose is in the marketplace at the perfect time. And to be very clear, this is not a business plan. This is not an idea. This is not a capital raise. We self-funded the blockchain. It's fully functional and live. We have 41,000 nodes that are currently supporting our blockchain all over the world. We have transactions and blocks that are being written on our blockchain every single day. That can be verified. You can go look that up. We already have real world assets that are onboarding. These are luxury hotels, oil and gas companies. Eric and Erica have been down to the Tulum hotels that are owned by a billionaire. They've met these real world asset managers that are tokenizing. Real estate projects, medical companies that are very, very promising. These are all real world assets that are at various different stages of tokenizing, whether A, they're in their stage of going through the audit, B, they're getting ready to file, C, they've already filed. You can look up the Edgar filings, D, they've already been approved, and now they're opening up their capital raise. Once they close the capital raise is essentially when their token will be listing on the trading platform. The average value, and this isn't necessarily, I mean, we can go above this, but our sweet spot is about $50 million. These are small cap companies that are wanting to tokenize, raise capital, but they don't want to be exposed to the same traditional risks of the capital markets. We've built one of the most esteemed blockchain communities in the world called Trusted Society. A lot of people coming into crypto don't realize that there is a learning curve and it can be expensive if you don't know what you're doing. And you can go buy Bitcoin and Ethereum and all these different coins, but there isn't any support that you can call with any of these projects. And so what we built was a community, and it has now thousands of members, and that community has access to white glove customer support, education through our social communities and chats, all of our events. You guys have probably seen that Eric has traveled down to a few of our different events. These events are where we actually bring our real world assets to so that our node operators can hear about the projects that are tokenizing on our blockchain. And the reason why that's important is because every real world asset that comes onto our blockchain has to use the Trusted Smart Chain token the same way that these other projects that were built on Ethereum have to use the Ethereum token. So what it does is it creates access and validation for our community. We had the genesis of our blockchain over a year ago, so that's when our distribution started. Our token is trading on the T7X IO trading platform. We're only on the T7X exchange right now. That is by design. Typically, if you were a hyped up meme coin, your strategy would be to shotgun onto all of these different exchanges like CoinGecko, CoinMarketCap, and then eventually with the volume increases, you can move up to some of the Coinbases and some of the others. And that's part of their strategy because they're relying on hype. Those true infrastructure type of products, they perfect their infrastructure, they perfect their utility, and then ultimately, once they've proven that model, they start to expand outward. They go get the layering and the support to be able to bring on the additional liquidity that allows you to go onto these massive exchanges. And so we're in phase 2 right now. We actually took a backwards approach, which was instead of doing the shotgun approach with all the marketing, we felt that if we built it and perfected it and proved it, then they would come. And what net right now, we probably have over 100 exchanges that are at our door that are willing to waive their fees for us to list our token on their platforms, which will we be considering in the second half of this year as we start as you start seeing the real world assets get through the approval processes and ultimately they are now trading, which our first trading platform or our first real world asset that'll be trading on the platform will be happening within the next probably 4 to 6 weeks. We have a goal of bringing on 100 real world assets over the next 3 years. Quite frankly, we believe we can bring thousands on within the next 3 to 5 years. But the internal goal initially was 100 real world assets. And I can tell you that there's no shortage of these companies that are looking to raise capital. When you build a community the right way, we have thousands of node operators who introduce us now to real world assets every day. One of my partners is a Wall Street expert. He and his team have taken hundreds of companies public. They have connections all over the world, and they are bringing real world assets to the table as well. And then we also formed a grant where we take 25% of all node sales, and anybody, any technology company can come apply for a grant with the Trusted Smart Chain. And we award grants to companies that are tokenizing real world assets, which essentially requires them to use our blockchain as the infrastructure. So we have no shortage of real world assets we probably have 40 to 50 that are at the table right now, probably another 50 to 100 that we're in discussions with at this stage. We built our own proprietary self-custody wallet. So these tokens get distributed directly to your wallets. You're the only one that has the keys and the access. You can send your tokens over to the exchange. You can sell them if you want to for the current trading price, or you can choose to hold on to them, which I'll tell you about 84% of our current community has their tokens staked long term because they understand the vision and the mission. They're not the short term here to get rich quick type of individuals. They really understand the mission and the vision of what we're building and what we're doing. All of this can be validated at explorer.trustedsmartchain.com. This is our Explorer. You can go look up the transactions happening in real time. You can see how many nodes are active online. You can see how many tokens have been distributed. You can see the current price of the Trusted Smart Chain token. We've been consistently trading in the 30s and 40s since we came out about 6 months ago. We've had some spikes. Right now, quite frankly, it's more being supported more so by the internal community. And as we continue to expand outward, you'll see more and more trading volume. But the key is the true utility and the demand that comes from the real world assets. And you're going to see where that comes from here in just a moment. We are CertiK audited. Less than 2% of all cryptocurrency projects have this type of audit. This is where they come in and they evaluate your code. They spend about 60 days doing it. And they're looking for backdoors to see if developers might be able to hack your blockchain at a later date. And they actually are looking to see if what you're telling the public matches with the actual code and what's underneath the hood. There's a lot of cryptocurrency projects out there that claim they're a blockchain, but they really are centralized. They use nothing more than a spreadsheet. Somebody pushes a button to distribute the rewards every day. And that is not true decentralization, nor is it a real blockchain. So the people that are CertiK audit are people like Binance, Ethereum, Samsung, Apple, Crypto.com, and we hold a CertiK audit, which is a pretty big deal in this space. So let's talk a little bit about how it works and the rewards and essentially where the utility comes from, and we'll wrap up here. So we have 200,000 nodes we're selling. That's it. When they're gone, they're gone. As I mentioned earlier, 41,000 are active. These are all independent node operators. There's no central entity that's controlling these nodes. So you have the ability to be able to purchase a node, and for your support and participation, you earn the blockchain's native token every day. You own a distribution of that token, which is the Trusted Smart Chain token. Once again, you can hold on to it or you can sell it. It's up to you. Now, why would you want to hold on to it? The answer is the utility. At the end of the day, if token has no use, it has no demand. Utility, what it does is it creates purpose, and that purpose creates demand. And where there is demand, there is value, right? That's the natural progression of cryptocurrency. If you look at Bitcoin, you look at Ethereum, XRP, Solana, BNB, Hedera, they all have utility. Ironically, Bitcoin didn't start out with any utility. Nobody understood it. There was no purpose for it. For the first 10 years, most people bought it hoping to get lucky. But then people started realizing that it was a great hedge against the dollar. In the last 5 years, the dollar's down, 25%. Bitcoin's up 163%, gold's up 238%. So people started realizing that this was an excellent hedge. And the reason for that is because there's only a set amount of Bitcoin that'll ever be minted, whereas the dollar, they keep printing and printing and printing. Now, banks and institutions are the ones that are buying up Bitcoin. So Where does our utility come from? This is where most people get pretty excited about our project. First of all, number one, I mentioned earlier that we take 25% of all of our node sales and we formed a grant and we support technology companies that are focusing on tokenizing real world assets. T7X is where we are listed. I mentioned that earlier. They're an exchange. They are a licensed digital asset platform. They are licensed with the SEC. They're fully compliant, 7 continents around the world. But here's what they're doing that's different. They built a platform that essentially is only listing real world assets that are registered securities so that these securities can be traded in the open market. This platform gives you the ability to be able to go create an account just like you would at Coinbase and now buy tokens that give you ownership in high valued assets. T7X, to my knowledge, is the first that's doing this in the open market that's catering to this demographic of tokenizing real world assets. And that's a big deal. So we approved them as a grant recipient. We actually approved them for a $50 million grant. We've satisfied $7 million of that grant. And what that money has done is it's allowed them to go out and get real world assets that are tokenizing on their block, on their exchange. The reason why we do that is because we are the infrastructure that makes it all possible. Every single real world asset that they list has to be built on the trusted smart chain. Every one of those assets has to use the trusted smart chain token to facilitate their ecosystem the same exact way that Ethereum facilitates the entire ecosystem for every single project that's built on their platform. If you look at the third most successful blockchain, it's BNB or Binance. Binance has a native token called BNB, which means that if you want to go buy any of the projects on Binance, you have to go buy the BNB token. And that's the reason why they're the third most successful blockchain project. So breaking it all down so you can kind of see a visual of how it works, T7X is an exchange. They're listing real world asset securities on their platform. Tulum Coin, this is Eric and Erica have been down there. Billionaire owns these luxury hotels down in Tulum that he's tokenizing. Grow Estate medical grade hemp facilities across the United States and Canada. Just one of their facilities in Canada is worth $50 million. White Claw Crude Oil and Gas Company, 50 different refineries across Oklahoma and Texas. All of these projects, they're launching their own coins. We are just the infrastructure that makes it all possible. So essentially, what does that mean? What does it do for the Trusted Smart Chain token? Where does the utility come from? Well, we've already talked about the gas fees on T7X. On T7X, any one of these cryptocurrency coins that launches has to be paired to the Trusted Smart Chain token. Any investor that wants to go buy any of these coins has to go buy the Trusted Smart Chain token first to pay their gas fees, their transaction fees. That creates tremendous use and utility of the TSC token. Now, in addition to that, and this is a big one, we require those real world assets to pay their investor distributions with the Trusted Smart Chain token. So follow me on this. A real world asset manager, they file with the SEC and they get approved. They do a capital raise for up to 12 months. It's no different than if a company was going public and they do a pre-IPO. You guys know pre-IPOs typically are aimed at accredited investors only. Well, in this case, most of the real world assets are utilizing an exemption called Reg A that allows them to solicit to both accredited and non-accredited investors, which gives them a much broader demographic to market to. What it also means is it gives the average everyday person a seat at the table. So they'll register with the SEC when they get approved. They'll do their private offering first. And then when they close the private offering, that's when the token gets listed and it starts trading on the platform. So here's what's important that you understand. All of these people that invest in their project during their capital raise are entitled to a quarterly distribution. They typically pay about 10% on average dividends. Well, we require them to pay those investors using the Trusted Smart Chain token. So think about this. If the average value is 50 million and they're paying out a 10% distribution, that means each real world asset's paying out about 5 million a year in distributions. Well, think about this. If we have just 100 real world assets on our chain, let's say we hit that goal in 3 years, that's $500 million a year in annual demand for the Trusted Smart Chain token. That's $1.4 million a day in buying of the TSC coin. And here's the most important question. Who do they buy the token from, Eric?
The node operators.
That's right. And they get to decide when they want to sell and at what price. The reason why Bitcoin ran all the way up to 125,000 in the fall is very simple. It's just demand and the supply, right? As the supply of Bitcoin becomes more scarce and the demand grows, we see the result. Now, somebody might argue and say, well, yeah, but Bitcoin's back down to 70. If you study Bitcoin, you'll know that every 4 years they have a halving event and it hits a new all-time high. And then about mid-halving until we're halfway through to the next halving, it starts to cool off again and it settles. What's interesting is where it settles is usually the previous all-time high. And that's essentially where we are right now. It was January of 2025 that Bitcoin hit about 75, 80,000, and people freaked out and couldn't believe that it hit that high. And now we've crashed to the old high right after the halving event. So and then it'll, based on if you believe in history and best predictor of future performance is past performance, then that cycle will continue as it becomes more and more scarce. So in the same way, I want you guys to think about this for a moment. Every real world asset group that comes onto the blockchain have to go to the open market, buy trusted smart chain and pay their investors with it. The investors over at T7X have to buy trusted smart chain to be able to participate. Now, we also require those real world asset managers to take 2.5% of whatever they raise, 2.5 to 10%, depending on their risk variable. And they have to actually go buy trusted smart chain and stake it for 5 years. They're not allowed to touch it. Why? Because we want to make sure they have collateral to be able to pay their investors. But what's that doing to the circulating supply of trusted smart chain?
Reducing it.
That's right. You guys realize 20% of Bitcoin approximately is locked up in wallets that they lost their passwords, seed phrases, or it's sitting on hard drives in landfills because people threw their computer away before they thought Bitcoin was going to be worth anything. So even though there's 21 million total that'll be minted, the supply is actually much smaller than that. In the same way, when you have all these real world assets that are having to go to the open market, buy and stake for 5 years, it's reducing the supply while you're growing the demand. Any asset class, you guys can tell me, any asset class, what happens when you have a growing demand and a diminishing supply of something? It's just value, right? It's not magic. It's just math. And if I go through the numbers with you, I think that you'll fully understand where the magic comes into the equation here. When you look at the distribution of our token, they call it tokenomics. And we modeled our tokenomics. In fact, we copied Bitcoin's tokenomics to a T. We looked at all these different projects. XRP has billions of tokens. This project has millions and millions of tokens. Bitcoin did two things that were brilliant. They said there's only going to be 21 million token. That unique fixed supply design led to a store of value, a unique store of value in an appreciating asset, right? Unlike the dollar, they keep printing and printing and printing. They also did the halving event every 4 years, which means that they literally cut in half the amount of token that are being released into the market through the miners and eventually going into the open market. So now you've got that growing demand and that diminishing supply. So we looked at that and we said, why would we try to outmaster the master? It's the most successful project, most successful tokenomics. We did the same thing. So we have a total supply of 21 million tokens that'll ever be minted. This is reinforced by a smart contract. It can never be changed. It's not a promise. It's a function of the actual software. There's nobody at Trusted Smart Chain. We don't own Trusted Smart Chain. There's nobody here. You buy a node. This is just, it's the same as if you owned a Bitcoin miner. Bitcoin is going to continue for the next 90 years until that last million Bitcoin are minted. Now, we also have the same halving schedule. So every 4 years, the distribution gets cut in half. So in the first 4 years, 10.5 million token are minted. A lot of people don't realize this. If you were there between 2009 and 2013 at Bitcoin supporting their network, you would have had access to something that was priceless, which was an accumulation phase. That's when they were distributing 2.6 million Bitcoin a year for the first 4 years, 7,191 Bitcoin a day, and there wasn't that many node operators or miners online. So you were getting a large distribution because there wasn't that many people to divide it up amongst. Here's the problem. You could go buy a Bitcoin miner today. You're competing against millions of other people online, including huge corporations and warehouses that are now running Bitcoin farms for 450 Bitcoin a day. See, you can't go back to 2009 to 2013 when distribution was at its highest, but where we are right now in our distribution is exactly where Bitcoin was in 2010. 1 year old in 2010, we're still distributing 2.6 million token a year for the next 3 years until our first halving event, which is 7,191 tokens. And here's the better part. There's only 41,000 active nodes online, and there will only ever be 200,000. I want you guys to think about this. If Bitcoin wrote into their white papers there was only going to be 200,000 miners and they sold out, which they would have in the first 4 years, and now the only way you could get one is if somebody was willing to sell you one, what do you think they'd be worth today? It gives you kind of an idea of scarcity. I also want to point this one other thing out here and then we'll wrap up. Just use the first year as an example of this. Year one, 2.6 million token are minted. Now, 84% of our token are staked, which means they're locked up. But I'm going to give you, let's just be generous here and say, let's say 30% of our community sold their tokens in the first year. That's about what? Approximately 6.5 million token that go into circulation. If all we did was bring 10 real world assets on chain, which we already have, and they were paying out 5 million a year in distributions each, that's a $50 million demand, and there's 600,000 token in circulation. What has to happen to the value of the token to meet the demand?
It's got to go up.
It's the only possible way to meet the demand. Now, fast forward 3 years, you've only got 7 million token minted, and you've got hundreds of real world assets on chain. You guys start to get the idea. So in closing, essentially what you're earning rewards for, I want to be very clear, this is not a passive investment. We don't ever call it that because we don't want to deal with securities problems. You're not buying a passive investment, you're buying software. It's not passive at all because you earn rewards for your support and your participation. So what does that mean? When I say support, your node is validating the transactions. It's maintaining the security. It's adding blocks to the blockchain. So that's what your node is doing. But you have to keep it active. So you can either A, host it on your own computer or server, but most people, they just use a third-party service. We have companies called GoFluid is one of them. That's a data center company that'll host your node for $1.95 a month. And as long as you pay your $24 a year, your node stays on and you're earning your rewards. And you will earn those rewards for the next 120 years. Now, the second part is you receive a vote for every node you operate, up to 200. That's the most votes anybody can have because we want to maintain decentralization. Why is that important? Because you are participating in the governance of the blockchain. That support and participation entitles you to a daily digital reward. That makes it a non-passive investment. You're buying software, you're earning rewards. Nobody is guaranteeing you an ROI. At the end of the day, if you do so, you do it because you understand supply, demand, and utility. Now, of course, you get access to our social communities. Nodes are $4,100 right now. The way our pricing works is every 1,000 nodes that sell, the price goes up $100. So you could come back 6 months from now and prices will probably be twice what they are today. And that will go until it caps at 10,000 a node, which is equivalent to a Bitcoin miner today. If you wanted to operate a Solana miner, you'd spend 15,000 to 50,000, and it's much more technical. So what's great about our program is that it's I don't want to say hands off because I don't want it to sound passive, but at the end of the day, Eric, how much time a day are you putting to this? Pretty little amount.
Right.
So
Minimal.
what's that?
Just pulling up my wallet. That's it.
Yeah, looking at your deposit. So $4,100 per node. We have more than, so what happens is when you buy a node, you're going to get an email. It'll tell you how to download your wallet, activate and host your node, which is a very simple thing to do. And then when you start getting your daily distribution. Now, we have a lot of people that operate more than one node. In fact, most people do. We have probably 80+% of our community that operate at minimum 5 nodes or more. So we have different statuses within our community. 5 nodes gives you 5 times the daily distribution. So if one daily distribution, say, just for simplicity's sake, 0.20, and I had 5 nodes, I'd be earning 1 full token a day, right? Versus 0.20 token per day. So you get a larger share of the distribution. Remember, 7,191 tokens go out a day, divided amongst the amount of nodes that are active. So right now, there's only 41,000 nodes. A year from now, there could be 200,000 nodes. So that's the beauty in getting in right now is you're getting a larger distribution of those overall daily rewards. We have different statuses: Prestige at 5 nodes, Legacy at 20 nodes. We have Luminary at 50 nodes. We have Architects at 100 nodes. We have Titans at 200 nodes. Eric and Erica are Titans within the community. And then we have our Sentinels at 500 nodes. And then we have our Icons at 1,000 nodes. And believe it or not, we have hundreds of Luminaries, Titans, Sentinels, Icons. I think we have 6 Icons. One of the things that a lot of people seem to enjoy about our program is that the nodes are they're tax deductible. I'm not a tax expert. This is not tax advice, but I've run nodes for 10 years and I've written off every single one of them. I operate a mining business essentially, and Section 179 of the tax code allows you to write off software as a business expense. So we have a lot of people that are trying to avoid capital gains. Maybe they don't want to go buy real estate right now because it's a little bit iffy. You go spend $500,000 on an investment property with interest rates at 6%. By the time you're done, you might be clearing a couple $100 a month in net profit. And at the same time, you can get the same kind of tax deduction here. You're getting daily digital rewards. And so we have a lot of real estate investors that get involved in our project, a lot of high net worth individuals that are here, a lot of wealth managers that are involved in this project. So you've got different levels that you can get involved. One thing that I will tell you is, and Eric will attest to this, anybody that gets involved in our project, especially when they start coming to the events and they start hearing and learning from the real world assets and truly understand what they have their hands on, wishes they got more when the price was where it was 3 months ago or 6 months ago. And I know that because Eric has said that to me. So in closing, I'll just say this, you guys. I'm an investor and I look for projects. I invest in the roads before the rush. I live in Queen Creek, so I'm on the other side of where most of you guys live. I moved out here 20 years ago and it was farmland back then. Today it's crazy, how it is out here. And what was interesting is I watched all the farmers sell the land to the early land developers, and the land developers subdivided the land, they made a fortune. Then the builders bought up the land, built, they made a fortune. Then the commercial developers came in. And I learned a pretty valuable lesson that I apply in business with that, and that is smart money invests in the roads before the rush. The rush is the 16 trillion in real world assets that's tokenizing over the next 4 years. You look at the roads, and Trusted Smart Chain is essentially paving the way to a regulatory and compliant tokenization of real world assets. And what makes up that road is the node operators, and they're earning the token that the real world assets have to use. They're also earning the token that the investors have to use. This is not a get rich quick deal. It's not a speculative deal. It's an infrastructure play. It doesn't matter if any of these projects that are built on the Trusted Smart Chain are successful or not. Of course, we want them to be, because all we are is the Ethereum. We're just the infrastructure. So I'll stop there, open it up for Q&A, and I really do appreciate the opportunity just for you guys to hear what we've been building and what we're really passionate about.